A very good evening, Mr. Sashini, and thank you for joining us.
Good evening to you and good evening to the viewers, and thank you for having me at NBC.
All right. Now, Mr. Sashini, talk to us about the role of this international merchandise trade report and how it plays within the Namibian economy, but also looking at the importance and the significance of high-quality trade statistics.
All right. Thank you so much for that question. First of all, maybe let's look at economic development. When you are looking at economic development, you are actually trying to evaluate the sustained increase in the quality of living standards of the people. And how does merchandise trade play a role in that? You will find that there are different indicators when it comes to a measure of how people are living. And let's look at how the Bank of Namibia, for example, compiled their balance of payment. They do have two accounts in the balance of payment. There is the current account and there is the capital account. But when you look at the capital account of things, you find that international merchandise trade, which is the transaction between our citizens as well as the citizens of other countries, it is the largest component. So that actually tells us how important trade statistics is. Another component that we may look at is also issues of the GDP. When you look at GDP, it's compiled in different methods, but there are various components like your government purchases, your investments, and so on. And when you look at net export is also a component which actually also is supposed to be improving people's standard of living. We also look at issues of establishing a new industry. At the moment, I think we can also look at Namibia. We have a logistics and supply chain, which is coming in. And that is because of increased industries that results from trade. We can also look at facilitating market access as well as access to technology. Without international trade, we will not be having access to the technology that we have now. So it's because of international trade, then we are able to get access to resources that we are using. Then we also look at issues of widening market access. Whatever products Namibia is producing, they eventually want to export that product. And it's because of international trade. That's why we can earn export revenue through exports of these products to other countries. Now, looking at the quality aspect of things, maybe I will just highlight the fact that high quality statistics is crucial. And it's very important for the NSA overall to look at this. And what do they do in order to come up with quality statistics? The NSA have actually developed within the NSA, they have dedicated the department solely to look at the quality of the products that are coming from the NSA. So within that department, as they go through assuring quality to the different products, they are guided by the Namibia Data Quality Assurance Framework, as well as the policy that is solely focused on data collection, processing, as well as dissemination process. So I think in the future, you might want to invite anyone from that department to come and unpack the details of how this happens. But when you look at data quality from the perspective of the NSA, there are various dimensions. Time is not the only aspect. There are different dimensions starting with time. You look at the purpose of the data. You look at the reliability. You also look at the fit for purpose aspect, that this data, is it fit for purpose when people are using it? So all these aspects, they are compounded now to form the overall aspect of quality. Yeah.
Now, the NSA has now recently launched the International Merchandise Trade Statistics Bulletin. The latest one is the one for the month of April. Could you just briefly share with us the highlights of this bulletin? Okay,
thank you so much. When you look at the month of April, the overall trade figure stands at 23.9 billion. This is a summation of the imports and the export. So for total exports, you have 11 billion as a total. And then for total imports, you have 12.9 billion. And the difference of that gives us a 1.9 billion trade deficit. Yeah.
And I was going to get to that, you know, in terms of really explaining to the laymen, what do we mean by a trade deficit? When we look in the report, the various figures we talk about, 1.9 billion for the month of April, 2.7 billion for the previous month in March, and 3.1 billion. Perhaps just for the benefit and also for, in layman's terms, what this trade deficit means and the factors within that.
Okay, thank you. Yeah, when you look at trade deficit, it comes from the trade balance. Maybe I could start with the trade balance. So the country's trade balance is the difference between your total export and your total imports. Now that difference, sometimes it comes to a positive or sometimes it goes to a negative. Now when it comes to a positive, it's a trade surplus, which is an ideal situation to have because now you have more export and you are earning a lot of export revenue that will then assist you to cover for your imports. Now, if the difference is a negative, it is now called a trade deficit. And that is a kind of a situation that is not really ideal because then you will need now to borrow in order to cover your import cost. Yeah.
All right, so we'll get to, I think the current state we are as Namibia is that we still import more than we export. But we'll get to that. Perhaps looking at April, we saw our trade balance, the deficit stood at 1.9 billion. Talk to us about the factors that led to that.
Yeah, when you look at the trade deficit, usually when we are analyzing this, we look at the different products that have actually contributed the largest to the deficit. And one of them is fuel. We import a lot of fuel compared to what we export, and that is expected because Namibia, even though we have discovered the oil and gas, we have not yet come to the extent of starting to, you know, to do any process to export or to use it. So that's why we import so much of it. And the deficit in that regard was about 2.5 billion. Then from that, there is also an aspect of two components. One of them is vehicles, and these are vehicles that are used for commercial purposes. That one was 569 million of deficit. And then we also have vehicles that was valued at just over 400 million. And these are vehicles for the purpose of transporting passengers or persons. Yeah.
Now, if we look at the deficit over the previous month, it was 2.7 billion for March. And then that's a significant improvement. And then we compare this 1.9 billion of April this year to April last year. It's 3.1 billion. What would you say are the reasons for? Because we're obviously seeing a decline in the deficit, which is a good thing, I believe.
Yes, we can actually say there is an improvement in the deficit, and that's we can make that conclusion because it's a positive trend that we have observed. But nevertheless, even if a deficit is a bad thing, it depends at what you are importing. Let's say, for example, Namibia is still a small economy and we are importing so many things. And when we look at the products that we are importing for Namibia, it's not most of them that are luxury goods. Because luxury goods, we are just coming to consume, we use them, but they are not factored in the process of production. But at the moment, Namibia is importing a lot simply because we are developing a lot of industries. And when you look at the agriculture, we import so much agricultural implements. We are not manufacturing that. All those need to come through imports. We even import seeds. We don't produce seeds in Namibia, we import seed, and all that contribute to this trade deficit. But if we see it that it's improving, then it's for the good cause of the country.
Now, let's go into the analysis of Namibia's trade partners. Who would you say are the main trading partners, and what are the products that we're trading on?
Yeah, I think for each floor, there are major trading partners, and then, of course, different products that maybe exported and also imported from those different. If I may start, I think for exports, we are looking at China, where we exported mostly uranium. And then South Africa, we exported the gold. And then we have Spain, Zambia, and Italy, where we exported most of the fish. Botswana, United Arab Emirates, and Belgium, we imported diamonds. That is for the export side. And on the import side, we have India, Oman, and Iran, where we are importing our fuel. And then China and South Africa, where we are importing a vehicle for the purpose of commercial purpose. And then Zambia, we have ores that are coming from there. DRC, we also have minerals that are coming from there.
Now, talk to us about the economic risk of having more imports compared to exports, especially the case that we are in right now.
Yeah, thank you so much. I think when you look at the country, Namibia, that has a lot of imports compared to export over a protracted period of time, we stand a risk in a lot of area. One of them is inflationary pressure. We know that when we are importing this product, if the prices of this product, the cost of producing them from the source country goes up, we are also importing inflation here. Then we also look at the supply chain disruption. For example, the geopolitical tensions that are going on there. We also look at issues of regulations. We also look at issues of diseases. I can give an example of the COVID-19 era. When it came, the supply chains were disrupted. There were border closures. And when that happened, you'll notice that we were running the risk of not having basic products here, because some countries have closed that. Then we also look at the loss of domestic industries. When we have developed an industry here, if this industry is competing on a global level, we will find that because of the low economies of scale for our production process here, the foreign goods, they will be more cheaper than the domestic product. So at the end of the day, the domestic producers, they will eventually shut down. Then we also have a continued running of the trade deficit. When we have that long period where we are registering deficit all the time, you'll find that we have our currency that will start deteriorating. It's not strong enough to support us when we want to buy more imports. So those are the consequences now of having imports that are more than exports over a very long period.
Let's talk about new industries, oil and gas and green hydrogen. Talk to us about the prospects that this would bring in our trade balance.
Yeah, when you focus on the trade balance, if actually we come to realize the production of the oil as well as the gas, what the impact will be on the trade balance is simply to reduce our imports of these products, and that's one, and also to increase our exports revenue, and as a result, then we are going to have a trade surplus. So going forward in future, if this is come to be realized, then we are going to have a continued trade surplus other than a trade deficit that we are currently observing.
Now, looking at the exports of food items, in April we saw that there was a trade surplus of 548 million, while a trade deficit was witnessed for beverages of 188 million. Interestingly enough, knowing that we have a beer producing company in the country, that's quite surprising to see a deficit. Perhaps just touch on the factors around these two figures.
All right, thank you. When you look at the trade surplus that was recorded for food, you will notice that Namibia exports food products, but there is a factor when you look at another product, and that is fish. Because Namibia is a big producer of fish, and that has actually led to Namibia recording a trade surplus when it comes to exports of food items. And what this really means is that Namibia has exported more food compared to what we are importing. So in a way, we can conclude that Namibia is self-sufficient when it comes to food. Now, going back to the issue of beverages, maybe it's just to highlight that, first of all, Namibia reported a trade deficit, and this beverage is non-alcoholic beverage. Does not include the alcoholic beverages. So in this case, it means that Namibia is actually importing more than what we are producing. That's why we have that deficit. And also, this is an opportunity for producers to close the gap, to see that if we are importing more of these beverages, can we not increase our production capacity, or can we not set up new industries in order to produce these beverages from within the country?
Especially if you think about juice and milk and those kind of products. The current report considered coffee as the commodity for the month. Talk to us about what this means. Is this because there's some growth in that industry in Namibia, in exports? What's the reason behind that?
Usually what we do in our trade bulletins, we look at current situations and we select different products so that we can analyze that particular product as a product of the month. Now, for the month of April, we selected coffee because of the season we find ourselves in. We are in winter, and there is a high demand for hot beverages, and coffee is part of that. So upon our analysis, we realized that we imported coffee worth about 12.3 million. This is mostly from South Africa and Switzerland. And that is because of the seasonality. So as we move in the winter season, you will notice that we are importing a lot of coffee compared to other seasons when it's warm.
Now let's look at other markets that Namibia can explore. I know there's also a big call that Africans need to start producing and consuming our own products. Talk to us about markets that Namibia needs to explore where there's actually potential for economic growth.
Okay, thank you. In terms of potential, I will not take us far. I think we just need to look within Africa, and we need to explore the Africa Continental Free Trade Agreement. I think through that agreement, we will be able to reach a population of about 1.3 billion people just within Africa that we can export our products to. Maybe if I can just say that when you look at these markets, they are different, or there are a variety of advantages that will, make us, get to sell our products to them. Because one, we are in close proximity. If I export a product within Africa, even if I have to export it to Nigeria, this product will get there before a product that I have exported to Europe or Asia. Another aspect is the aspect of the standards. Standards in terms of SPS, or sanitary or phytosanitary measures. These are measures that are put in place in order to guide what countries can accept in their country or what they cannot accept in their country. So these standards are very high in Europe, they are very high in America, they are very high in all those countries out there. But Africa has very limited regulations. So if our products are able to enter the EU, then they will enter to any country in Africa.
Now let's continue with this discussion on the African Continental Free Trade Area. What needs to happen in order for Namibia to really fully benefit from this arrangement?
Yeah, I think this agreement was ratified a long time ago. There has been a process in order to start trading under the CFTA. And those processes have been going on and on and on. And the very, very last one that was supposed to happen was for Namibia to gazette its tariff concession. And that was done in January this year. So as it is, companies are free, or they are allowed as it is now to trade under that agreement. But surprisingly, we are not seeing so much companies trade under that agreement, because most countries are not registered. So I would urge those companies who wish to explore this agreement to register as a trader under the CFTA with NAMRA, and then there onwards they will be able to benefit from the reduced tariffs under this agreement.
All right. Well, Mr. Sashini, we thank you so much for your time. We thank you so much for your insights on this report.
Thank you for having me.